Eric Mwagith, Mwagith.com, with the world market analysis for the weekend of August 22nd, August 23rd, 2015. Let's take a look at markets here. We take a look at the US markets about to close here with about 50 minutes to go. And the markets are down about 413 on the Dow, which is pretty much a big down day, about 2% across the board on the Nasdaq, S&P 500 also. And if we take a look at world markets, we see that in Asia there was a big drop overnight. As you can see, China was down 4%, Australia was down 1.4%, Japan was down about 3%, Hong Kong 1.53%. At the close, European markets were down about 2 to 3%, so big down close on Friday. But we all know markets were down on Friday, so no surprise there. Again, if you really want to understand what's going on, I would suggest check out my playlist on YouTube where I discuss what's going on, or at least the setup that the markets are showing worldwide. And so check out this video playlist called The Ultimate Mwagith Sell Signal. Pretty much this explains what's going on. In fact, if you take a look at worldwide, one of the first markets that gave us an idea that this could take place was, surprisingly, the South African market, which had moved its monthly RSI to 3-year lows. So once the South African market was showing signs that other markets could actually do the same, once it moved to 3-year lows on the monthly RSI, after spending the last couple of years on a nice bullish uptrend, as you can see, once that break in the RSI took place, I think, to me personally, that was a warning signal to look out for more to take place across the globe. And so you see here, the first requirement was that the RSI on the monthly make a move to 3-year lows, and also secondly the MACD making a fresh move to fresh 3-year lows. And once you see those two things, the indication there is that you're going into a major bear market correction. And another market that was doing the same was the Australian market. And in this chart, it's a monthly chart. What I've done is, instead of using 36 months, I'm going to be using 34 months monthly chart. Why? Because 34 is a Fibonacci number, and it's pretty much close to 36. So yes, it's 3 years, but I'd rather use the 34-month monthly chart. And we can see here, as far as the Australian market is concerned, we had seen the ultimate sell signal once the RSI on the monthly cracked below to 3-year lows, and also it moved its monthly RSI below 50, suggesting a big down month. We're already down about 7%, 8% for the month, because we are moving below 50 on the monthly RSI time frame. And also the MACDs were not looking good. One of the MACDs was already trading at 3-year lows, as you can see. Not only trading at 3-year lows, it was moving below zero for the first time in many years. So there was another market showing potential for a serious correction. And the market that actually I was watching, and we've been talking about this the last couple weekends, is the Dow. If you go back to the last couple of weekend analysis videos, I was talking about the threat, and the risk was the Dow would move its monthly RSI to 3-year lows. On the monthly RSI, we see that this has already taken place as of right now, and also right now we are moving below 50 for the month, which suggests net a big down month, already down about 6.5% for the month, because we are moving the monthly RSI below 50. So it's not looking good, and actually could get worse. And this was telegraphed by a very simple line, which is this line here, that the risk was, if the Dow cracks to 3-year lows on the monthly RSI, expect a big down move, probably the beginning of a bear market, and a major bear market at that. Take a look at the Dow. We see here also the MACDs moving to fresh 3-year lows and also moving below zero. So this is more and more looking like the beginning, if not already showing evidence that this is now a changed market, one that looks to go down. Another world market showing the ultimate sell signal is the FTSE. So we can see here that the London market is already pressing and moving to fresh 3-year lows on the monthly RSI, and the MACDs are already pointing down, trading at 3-year lows. In fact, here on both MACDs. So here moving to fresh 3-year lows, which is a major sell signal. And also you see that the other MACD already cracked to fresh 3-year lows and trading below zero. That by itself suggests that European markets should also be under tremendous pressure to the downside. Not to be left out of this equation is the Australian market, the Canadian market, the TSX. And just to show you here, already down about 6%, 7% for the month. And here the problem is this could get worse in the coming weeks, coming months. It doesn't mean that this has to go straight down day to day, but month to month this doesn't look good. You see here we are breaking to fresh 3-year lows on the RSI. Again, the ultimate sell signal has been confirmed long before this week. We can also see here that moving below zero on the MACD and also making a fresh 3-year low is the technical reason why this is showing a down move. We take a look at another market. Take a look at the EWZ ETF that trades in the US, that tracks the Brazilian market. And also you can see here it already slipped to fresh 3-year lows right here. So forget about price for now. This is risky because it's moving to fresh 3-year lows, and we can also see here the possibility that the RSI moves below 30.90. MACD is also pointing to 3-year lows. MACD is already trading below zero. Momentum is not good, and the main MACD you can see here already moved to fresh 3-year lows. That's a major sell signal. This is not looking good worldwide. Pretty much any market you look at. If you take a look at the Brazilian market itself, on the monthly, there's a trend line going back to 2002, and we seem to be breaking this trend line this month, suggesting that now we are open to trading even lower based on that trend line break. It doesn't look good in terms of how things are setting up. If we take a look at a long-term monthly view for the French market, the French CAC, and you can see here we are breaking a trend line right there, trend line going back to 2009. So that's a primary trend line break. That's not good. So that's one line of violation indicating potential for lower prices. And also if I draw a line right there, you can see that this line break there, that line break was responsible for the break coming off the highs of 2007. And of course we know what happened in 2008, 2009. And now we are breaking below that same red line, suggesting that at this rate the odds are now increasing for another major correction lower. So that's one view, which is the price or the RSI telling us that the sentiment has changed and is pointing down. We are changing that direction here by breaking this trend line, and also the MACD is breaking through a long-term trend line. I guess if you draw it like that. As of right now, with Friday's move, which is not reflected on this chart, looks like we are breaking this trend line, and if that's a trend line break on the MACDs, also suggesting that more than likely this could suggest month to month this is going to be leading into a bearish phase. If we take a look at the German market, right now we seem to be breaking this long-term trend line going back to the lows of 2009. So that's a major signal there suggesting lower prices. The last time we had a major trend line break on the RSI was here, end of 2007. That trend line break was responsible for the move that kept the market with a bearish tone for the entire year of 2008. So the risk here is for lower prices. That doesn't mean that this is going to be day to day down days, but generally speaking, as of right now, month to month, it doesn't look good to try and play the long side until we see some evidence of support. And right now we haven't seen any evidence, in my opinion. If we take a look at other markets, for example in Hong Kong, already trading at fresh 3-year lows on the monthly RSI. It's not good. And also the MACDs are trading at fresh 3-year lows, or at least one of the MACDs. So again, we see the classic sell signal is being confirmed here. pretty much indicating lower prices. Take a look at the Singapore Straits, and the same thing here. RSI trading at fresh 3-year lows, having a big down month. Why? Because the monthly RSI is moving below 50. So all these are pointing to lower prices, have been pointing to lower prices this month. Also, we are looking at making a fresh 3-year low on the MACDs, suggesting that there's a possibility of lower prices in the coming months. If we take a look at the Chinese market, there was a line that we've been watching for support. So far it had held, but I think after Friday's 4% drop, that suggests that we've broken that line of support, which was one of the lines we were watching for support. So a break of this weekly RSI trend line suggests that there's lower prices there. We take a look at the daily in terms of the Chinese market, and we can see the recent RSI break here. Now that break killed the current market, which is this period here. So that was significant, and then we can draw a line from there. You can see recently we came and tried to reclaim above that red line, or red, let's call it this red line there, and we stalled. We've been down since, and also we are, as of Friday's close, with a 4% drop, we are now trading below the 200-day moving average, suggesting that more and more momentum is actually pointing to the downside. So lots of things here pointing everywhere you look that markets are not stable after they've had a tremendous run over the last couple of years. It only makes sense that now we are seeing the flip side of a bull market, which is a serious correction. If we take a look at the Japanese market, we see that at a drop 3% on Friday, and that's significant. Why? Because the line that was supposed to be support is being broken, and the line is right there. It's been bouncing on this line over the last year or so, but now with the Friday drop of about 3%, that has broken, suggesting that even this market is now under the threat of going lower. In fact, if you take a look at how it formed its most recent weekly closing high, you can see here there was a slight higher high in terms of weekly closing price level there, but we can see that the RSI continued to make lower lows. So it was definitely running out of momentum before the recent drop, and we should expect it to trade even lower based on the way other markets are trading. Keep in mind, while it made this improving price highs on the weekly, RSI failed to move above 61.8 during this most recent high, and that's a major red flag. If we take a look at the Indian market, I'll just draw one line on the Nifty, and that line might help us understand what's going on. Number one, Indian market seems to have held better than most markets, but I'm going to draw a line right there on the monthly RSI, and this line gives us sell signal in the Indian market over the last 10-20 years. Every time we break below that red line, we get the market moving low into a bear market. Same thing happened here early 2000, which is off this level here. Then we had this trend line break there in late 2007, early 2008. We had a resistance on the red line there, which was this high. We went into a correction, and now we seem like we are going to break back below the red line. If that's the case, the indication there is that even the Indian market should be due for a major correction in the coming weeks and in the coming months. So be careful out there, and it's going to take many weeks and many months for this to resolve. I expect markets to have strong rallies from time to time, but generally speaking, until the monthly charts repair themselves, you are now in a confirmed downtrend. How lower it goes is anybody's guess, but generally speaking, it might take anywhere from 12 months to 36 months for this to resolve. Be careful. Eric Muadh, Muadh.com. As always, good luck, peace, and blessings. I am out for now. Woo, yeah. All right, see you guys. Take care. Peace. You still there?